Welcome all to the Node, your place for DeFi and crypto news, interviews, and education. I am Mike, aka Veteran Crypto, and with me as always is David. How's it going, brother?
Doing well, Mike. Happy to be here, man. I'm looking forward to talking today about that AI XBT agent. I think that'll be interesting.
Absolutely, absolutely. So, those that aren't familiar with our format, our first hour is we're gonna be going over kind of the news, what's going on in DeFi, crypto, and the macro, and then for the second half of the show, we are going to be doing a deep dive into AI XBT today. So, with that, let's introduce everyone to our socials real quick. So, if you want to join the conversation and join the chat with Freak Atomic and Ellie and the rest of the crew, come on over here to YouTube and you can find us at the Node Network, all one word. And you know what? I'll get into the different channels here in a second when we do show our homepage. But if you want to find us on X, you can see we're live right now. It's at the Node Network. Only difference is there's an underscore between Node and Network. So wasn't somebody already had the all one word, so had to do that underscore. And then last but definitely not least is our website that David built out and just recently gave a facelift to. Loving the changes. But you can find that at, not at, just the node.pro. So with this is where you can find it truly is the node of the node. So everything that we offer, live shows, our education, no cost education programs, our paid one-on-one coaching, the newsletter that we're about to fully launch, the store where you can buy paperback books of David's lessons, and also soon we'll be having merch, so hoodies, t-shirts, hats, all that kind of stuff. But as you can see here, right as soon as you come to the home page, you can click this button, find your starting point. So based off of where you're at in your education, your journey, where you're at in investing, you can click on these. It's just 3 quick questions. If you're new and you say, you understand the fundamentals of safety, how much time do you spend or can you invest weekly in your education? Let's say 2 to 3 hours. Then, it gives you a suggestion. So it suggests, start at no cost with the intro to DeFi. And that's part of DeFi U, DeFi University. So we highly encourage people to use our no cost education first so that you can see the value that we offer. And it's in a lot of ways, it's good to start there and develop, because we have a front facing aspect to where we teach the mental aspect of investing first. So it's important to learn the discipline and uh, the that's the best way to put it. Just the discipline of investing before you start actually investing any liquidity, because otherwise it's going to not ensure, but it's going to increase your chances of success. There's no guarantees in any kind of investing, especially in crypto and DeFi, as it's a very new technology. It's still very much a speculative market. So keep that in mind. With that, we have 7 shows on YouTube, but we have 14 different live shows and meetings. So first off, you have the Node, our daily show, Monday through Friday, that you're watching now. It starts at 9 a.m. Pacific time. You have the Blockchain Report. That is Monday, Wednesday, and Thursday at 2 p.m. Eastern. That's where Jeff, our the third founder, he has for years done live shows and pre-recorded shows where he does deep dives into very early projects, many of which he does airdrop farming. So if you're into earning, free crypto potentially, that's a great show to watch. If you like getting in on early projects, great show to watch. Monday through Friday, we also have David's daily market wrap up. So he does technical analysis of what went on in the markets that day for about 15 to 20 minutes. And if you would like, you can join up on YouTube. And again, this is a no cost show. and ask him to go over your project if you want, to get some TA on a project that you're doing. We highly encourage, interaction with us in the chat. Also, on Tuesdays and Thursdays, he is doing and I missed it yesterday. No excuse, but I just missed it. But with Ellie, a member of our community that's in the chat right now, we selected her to go through his one-on-one coaching program live on the show, so we can show the value in it. So that is a great one to catch. Uh, Aside from that, in DeFi University, these are all the live calls that he does with the members of his community. So to join these, it is a paid service. It's $99 a month, and you can join the live calls. And these are daily live calls where other members of the community are sharing what they're doing. They're at different stages in their education, and so you're free to ask questions. David gives lessons live, and there's a back and forth. It's an open forum classroom, basically. Think of it kind of like a college course or something like that. But you can find mentors there. Find people that have made all the mistakes you can make in DeFi and crypto, and that aligns with kind of your thesis, your risk profile, and potentially fast track yourself to success. And for 99 bucks a month, that's nothing compared to some of the programs I've seen out there that are 4 and 5 figures. So do with that as you will. And then our after hour show. So like tonight, me and Jeff, we have Crypto and Chill. Jay and Ellie on Wednesdays and Sundays, they do Gaming and Chill, where we just play Arc Raiders or other games. I know Ellie's looking at a couple of different games now, like Albion. The Red Pill that we did last night, and talked about the breaking news where the Trump administration moved marijuana from a Schedule 1 alongside of heroin to a Schedule 3, which is in the same family as like Tylenol with codeine. So a lot of progress there, and a lot of the psychedelics that are proving to be very effective as far as a treatment for things like PTSD. We went over all of that last night. So we basically just talk about controversial topics on the Red Pill, politics, religion, things like that. Sovereign Soil is my solo show where I talk about and share my experience with decades of emergency preparedness, homesteading, things like that. And then Jeff has Saturday Night Fever at 9 p.m. Eastern, where he interviews DJs and gives tutorials on mixing music, things like that. And then sometimes he just spins music. So we truly are a network here, have a little bit of something for everybody. And then again, our newsletter, that's about to launch. I think we're just dialing in a couple small things. And then our store that I mentioned is where you can buy paperback versions of the books, the investor mindset. And also, again, we'll be having hoodies, hats, T-shirts, all of that sort of stuff here soon. And if you want to join the community, you can come here. And again, the no-cost DeFi University. But also, if you scroll down, you can find our Discord. So if you, we've had a bunch of people joining that lately. We have over 400. I think we're approaching 500 people in our Discord. Great community of people. You can come in there and you can ask questions. We don't care what you invest in here. We just want to educate people. We are not influencers. We are not going to tell you, necessarily to not invest in something or to invest in something. We are here to educate you on these different projects. What you do with that education is up to you. I might laugh at you a little bit for buying certain projects, but you know what? You might laugh at me for buying some of the stuff that I do. So I know David laughs at me for doing arrow locks, and I just can't help myself. So with that, David, do you have anything to add?
No, so, Mike, as of right now, the website really has come a long way, and so has the node in about 2 months or so, a little bit less than that. So
not even. It's been like 6 weeks.
Yeah, it's been 6 weeks. So we've made a lot of progress in 6 weeks, but there's still a lot more to do. And, I'll tell you that it's easier for me to work on the weekends because I don't have to task switch. I can like sit in an a block of time for like 6 or 8 hours or 10 hours or something like that, and I can just get
It's
shit
hard to
done.
do once you get on a roll. It's
Yeah,
hard to like lift and shift and then lift and shift back. It's yeah.
right.
I know what you mean.
So like during the week, the progress is much more slow. And then on the weekends, all of a sudden, I'm able to get things done much, much more quickly because I've got a bigger block of time and I don't have to be going back and forth between different tasks. So, as you were going through the website there, I was just thinking to myself, okay, well, the newsletter, I've got to finish all of the Google Cloud email sends.
Hmm.
Um, for the community page, I need to make the Discord much more prominent on the community page.
Hmm.
For the live, if you click on that live one, there's a bunch of things that are broken, like the chat is broken on the right there. On the left, I think those links don't work. And then when you take a look at some of the replays, I don't know how this is happening. This is actually really, really interesting to me, but I don't know how it's happening. But the bot that pulls in the live feed from YouTube
Hmm.
to the website, which is hard coded to our website, our YouTube.
It's
It's
weird. Sometimes like it pulled that owl, like
yes,
that freaking, barn owl, a live cam of these
yes,
barn owls in a nest.
yes.
It's
So
like
I
this
think
random
I
stuff.
think what's happening is, even though it's hard coded to our channel, if there's a problem, I think what it does is it falls back to like a known good YouTube channel and it pulls
Mhm.
something in just because it's a fallback. It's a known good channel. So I got to fix that. Let's see here. What else? On the homepage, got some stuff to do on the homepage. So the thing about the website is that building that stuff out is actually really easy. That stuff is really straightforward, really easy.
Mhm.
It's just a matter of sitting in front of the computer and doing it. The stuff that is not easy though, bro, is those agents,
Yeah.
those open claw agents. It's so funny because you get something working and it tells you everything's good and it runs once and then it'll break itself.
Well,
It's like,
you know something? There was somebody on the Mario Naval show that when I dipped out at the end of yesterday's show to go be on there. One of the guys on there said he bailed on OpenClaw because he was having the same issues that you're talking about, and he went to one called Hermes. And I
yes,
guess he's saying Hermes is much better.
really.
Yeah, just something to maybe look at.
Yeah, I've heard of Hermes. And the one thing that I'm running into, well, there's a couple of problems that I'm running into now with these bots, but one of the big problems is they're turning out to be very expensive to run on Google Cloud. So I guess if you compare it to a human, we're talking about like
Oh
they are
yeah,
extremely cheap.
yeah.
But I'm having a difficult time like controlling the expenses of these agents on the cloud, and it's not out of control by any means, but it's still like right now as we're speaking, I'm working in Cursor and just having it run to cut the expenses on one of the agents, the accounting agent.
Mhm.
So I think I might actually take a look at Hermes and see if I can, run that instead of OpenClaw, because if that's going to be much, much more efficient and easier to run and fewer problems, then it's a win-win across the board.
Well, it might. I mean, potentially, just it might accelerate being able to get some of this stuff like the like the newsletter and our some of our paid services up and going to help mitigate the cost of those of those AI agents and things like that.
Yeah, yeah. I mean, seriously. For right now, I'm just focused on making sure that I want to get that store up and running. I really want to be able to, I want to wear our own merch. You know what I mean? Like,
I'm pretty excited about getting some hats. Like, I
me
mean,
too.
me and you both, and of course, I like the broken bill. I know you like the flat bill, so I found a couple of suppliers that have some good hats, the different styles and stuff like that. But yeah, it's I definitely would love to be wearing our merch while we're doing the show.
Yeah, me too. Me too. And I think it's going to look really cool. So that's, I bought myself a new notebook yesterday. So, one thing that I found, and I think that this is something that everyone can, get something out of, is having a notebook where you write down literally pen and paper There you go. See? Yeah. Great minds think alike, man. Like
Yeah.
really just being able to take pen to paper and write down your thoughts,
It
you
helps
know,
you retain it.
it does. It does. And I think it's just better than using like, Google Docs or something like that.
Yeah,
So,
yeah.
yeah.
No, it's about the only time I use Google Docs is when I'm sharing something with other people, and so everyone can edit and make changes and things like that. Collaborative stuff. That works really well. But yeah, if it's just something where I'm trying to figure something out, or I'm trying to task myself with things, I just use pen and paper.
Yeah. Yeah. No, I agree. It's a lot easier for me to get something out of my head and get it down on paper and then be able to go through each of those tasks that I write down for myself and complete them. So
Yeah.
it's better that way. Yeah.
Well, and you get that little endorphin rush, putting a check or a line
Yeah.
through each thing,
Yeah, you
where
totally
it's just
do.
like done, done. Like I love dry erase boards for that. Like if we ever have like an office or a studio, I'll probably have a dry erase board, because I love being able to, line things out. I don't know why.
Yeah, no, I agree with you.
Yeah. All right. Well, let's jump into some news. Actually, here, let's. I found this and found it kind of amusing because it's a post that somebody did. It says Bitcoin for retards. It says in 2008, some genius named Satoshi Nakamoto wrote a paper. It explained magic internet money for dummies. Let's break it down so even a complete retard can get it.
I love it.
It says the problem: banks are for pussies. Banks are slow as shit. They steal your money with fees, and the tellers laugh at you. Total scam. Fuck banks. The
Yep.
solution: Bitcoin is magic beans. You zap straight to your buddy. No bank, no boss, no bullshit. You send it directly, fast, free, and you can tell the government to F off.
Yep.
How it
Love it.
works. The blockchain. Every trade is written in a giant public diary that no one can erase. It's called the blockchain. Each page has tons of trades. Once it's written, it's forever. Don't be a retard. Try to change it, and we'll laugh at you. Miners are autistic computer nerds who solve hard math puzzles to keep the diary safe. They get paid in new bitcoins for being basement dwelling keyboard warriors. And it says why it matters. Any retard with a phone can use it, even in a cave. No government or retard boss controls it. It's protected by super hard math that makes your head hurt. It belongs to all of us. Bitcoin is more than funny money. It's a way to trust strangers online without a boss telling you what to do. It's powered by nerds, protected by math, and open for everyone on Earth. Don't like it, you can get wrecked. So that I thought was kind of funny to find.
I love it, man. That's great, and it's all true. It's so true. It's magic internet money. The way that I would describe Bitcoin in one sentence is decentralized internet money. That's the way that I would describe it. Permissionless and free. Free. It's with that exploit of RSETH and the layer 0 bridge,
Yeah.
and then seeing how Arbitrum, the DAO, froze ETH on their layer 2. That means, well, ETH is not decentralized.
No.
You take a look at something like Tron, with all that Tether USDT getting frozen on Tron.
Yeah, Tether, USDC, like all of it. It's pulling back the curtain and showing that all of this is not decentralized. Like Bitcoin on native Bitcoin on Bitcoin mainnet is truly the only decentralized one that I've seen so far.
It's the only one. I don't think that there is another one. Like up until this exploit of layer 0 and watching the Arbitrum DAO freeze ETH, I thought that Ethereum was decentralized too, and it's not. Obviously, it's not.
Has any ETH on ETH mainnet been frozen?
Well, there was, I think, the largest hack or the largest exploit was, I want to say, back in 2016. I want to say, wasn't there something called like the ETH DAO or something like that?
I honestly don't know.
And it was like 10 or 20% of all ETH was essentially stolen back then, and they basically forked the chain in order to undo that transaction.
Gotcha.
So, hey, that's not decentralization. If the chain can be changed so that a transaction can be
Erased.
unwound,
Yeah.
erased, that's not decentralization.
True.
So I don't think that that's ever happened for Bitcoin. Now there was a problem with Bitcoin, like I want to say in 2010, and I think
I vaguely remember, I think, what you're talking about.
yeah, that there was
There was
some
like somebody somehow minted.
minted.
Yeah,
Yes,
yeah.
yeah, yeah. And so, I mean, I guess if we want to be generous, we could say, hey, that was
But
the
but didn't
beginning.
didn't the chain itself fix that? It wasn't
I
any individual or
I
group.
I don't know. I don't know. It could
Might
have
be
been.
something to look up because I for some reason I remember that like the chain itself invalidated it, pretty quickly, and it basically forked itself. And I could be wrong, but I for some reason I think that the chain itself is what mitigated that, which I would think would be decentralized
So I would agree with you. And what I'm
if
trying
that's
to,
the case.
yeah, so it was in the early days of Bitcoin, and there was all of this. Okay, so this is the value overflow incident. It was on
Mhm.
August 15th, 2010.
Okay.
It's the day Bitcoin almost died. And so here's a breakdown of, what actually happened when 184 million Bitcoin were minted out of thin air. So here was the bug. An unknown user sent a transaction that created two outputs of roughly 92 billion BTC each.
Holy.
Uh, yeah. So the math in computer programming, if you add two very large positive numbers together, they can exceed the maximum value the system can hold. This causes an overflow where the sum resets and looks like a very small or even negative number to the computer. Okay. So it looks like Satoshi to the rescue here. The community spotted the weirdness on the blockchain within about 90 minutes. And Jeff Garzik, an early developer, posted about it on the Bitcoin Talk forum. And Satoshi Nakamoto immediately went to work. Bro. So the original OG Satoshi went to work, and within 5 hours, Satoshi and other early developers released a new version of the Bitcoin software, version 0.3.10. So
Okay,
this
so
was
the first version wasn't decentralized then.
well, I mean, look, it's software. This is software, and so you can put out a new version of the Bitcoin software, but the node runners have to adopt it. And back in 2010, I bet that there were very few, and they probably all
Okay.
knew one another. You know,
Well, they were probably all a member of that chat room or whatever that you were talking about.
yeah, that's probably true. And so basically, it was a soft fork. The new code told the
Okay.
network to ignore the bad block and all transactions stemming from it. And so this essentially rewound the clock. And miners had to abandon the corrupted chain and start mining again from the last good block. So that was what happened back in 2010. But I don't think that
Okay.
there's been
So
anything like that since.
no, but I would think that that would still, by definition be decentralized, because like you said, it's like they made changes to the chain, but it had to be adopted by all the nodes, universally. So
So
yeah,
I don't know that it has to be adopted by all of them, but
the majority.
if they wanted to continue, mining and verifying and validating blocks, then they would they would need to be running that new version of the Bitcoin software.
That's
Um,
that's interesting because I mean, does that open the door to where if there was a huge, a push to change Bitcoin in some way, that they could almost and they made it advantageous enough for the majority of node operators or miners that potentially they could change like the max supply of Bitcoin or something.
sure, yeah, but you would need the the agreement of users, of node runners, of
Hmm.
miners. these groups would all need to agree together, and then you
Oh
might,
yeah, no, I think that was it like 51% or something like that.
I don't know that it's necessarily a certain percentage, but I think that it's like, several groups would need to agree together in order
Yeah,
to push something like that. But I mean, at the end of the day, it is software. It
yeah.
can be changed. It can be upgraded. And you know what? That's just something that we've got to know and understand. But I just don't like knowing that my ETH can be frozen, or if I hold Tether, that it can be frozen, or depending on the chain that you're operating on, that
Well,
your
it
assets
defeats
can
the whole
just be
point.
seized.
Well,
Yeah,
it defeats the whole point of crypto. I mean, most of us got into it for that kind of libertarian, you know, keep the government hands out of my pocket. And so, yeah, if our different crypto and digital currency holdings can be frozen and things like that, then what's the difference between that and a traditional bank account where they can freeze your account?
right.
So, yeah, no, absolutely. This morning I bought a little bit more of Bitcoin. Just from all the news that I'm seeing. It seems to be the safest bet. But
I think
on
it's
that,
the only bet. I mean,
yeah,
if you're looking for true decentralization and like, freedom money, well, that's Bitcoin.
oh, absolutely. Sorry, I got to
Yeah.
shift my little sun blocker here.
Oh,
All right. It's like glaring right in my corner of my eye. So let's give a quick update. I'm not going to get into. I think we all know, and we've reported multiple times on what happened with Aave and Circle and the exploit with Kelp DAO and all that. But let's give a quick update because I think it's important. So those that don't know, there was an exploit. Massive amount of liquidity was sucked out of the market by the Lazarus Group in North Korea. But a really cool update. Let's see. So there's a blame game going on right now, like on Discord and across social media, where Kelp DAO is pointing the finger at Layer Zero. Layer Zero is pointing it at Kelp DAO, and of course everybody's trying to do damage control. But the institutional pivot, well, we'll get to that next. So what happened is as a result, and this is something that is kind of refreshing to see, the DeFi community has come together and launched something called DeFi United. So it's a massive, first of its kind emergency coalition formed on April 23rd, 2026, to stabilize the lending markets, followed by the almost $300 million Kelp DAO bridge exploit. The goal of the coalition is to cover the shortfall in RS-ETH backing and prevent a systemic collapse of the world's largest decentralized lending platform, Aave, where the attacker deposited the unbacked tokens to borrow hundreds of millions in liquid assets. Who's involved? Aave, the lead coordinator, founder Stani, I'm not going to try to pronounce his last name, personally committed 5,000 ETH to the relief fund. Mantle Network, the largest contributor so far, proposing 30,000 ETH, 70 million to 105 million strategic credit facility to Aave to absorb bad debt. Lido Finance, moving to authorize a contribution of 2,500 staked ETH via an emergency Aragon vote. EtherFi and Athena, providing liquidity support to stabilize the peg of restaked ETH tokens. Layer Zero, working on the technical forensic side as the exploit targeted their bridge infrastructure and contributing to the recovery fund. Arbitrum Security Council successfully froze 30,766 ETH of the attacker's funds, which is being earmarked for the recovery effort. And then, of course, Tether, what they did in freezing funds. So this is interesting. There's aspects that we just got done discussing that I'm not a big fan of, that, being able to freeze assets. In this case, a lot of it is working in, kind of our favor because they're able to freeze the assets of these bad actors. But on the other side, it shows the true nature, the non-decentralized nature of a lot of these assets. So it's kind of a double-edged sword. I mean, kind of what's your thoughts, David?
Yeah, I mean, seeing all of these different DeFi protocols come together, the one that I think was missing was Eigenlayer. So
Yeah.
Eigenlayer is, kind of the king of this restaking layer, right?
Mhm.
Didn't they basically like create the ability for LRTs to exist, I think?
I believe
Um,
so.
but we're not seeing Eigenlayer, making some large contribution to this fund. That's definitely something worth digging into. And I'm going to do a little search real quick.
All
So
right.
what did you say the name of the relief fund is called?
The relief fund is called, want to make sure I get it right, DeFi United.
Gotcha. Um, Part of the DeFi United Relief Fund.
Well,
Uh,
and I find it interesting that a lot of these protocols and chains and things like that, they're kind of trying to play the blame game, and and I've seen a lot of people on social media, kind of trying to trying to support Aave and all these different different people and platforms that were involved in this, but it's important to just step back. If you had liquidity that was frozen or not, if you're in this community, if you're in DeFi, if you're in crypto, we need to stay objective. And from my point of view, just purely observational, is this revealed a lot of major issues, kind of like fault lines in DeFi, and how they're interconnected, and other exploits in the past and hacks in the past have done the same. There is still a lot of work to do to firewall, the liquidity that's that moves around in these markets, so that very quickly that exploits and hacks can be contained, because otherwise there's a ripple effect. It started out in this case with layer zero, and then quickly moved to Aave, and it moved to all these other platforms, and and then it involves Circle now and USDT, and it's just rippled across all of DeFi. And this is something that we were reporting on a couple of weeks ago about Ave's risk team, Chaos Labs, and their core development team leaving, and the fact that all of their liquidity is pooled into one pool, and there it was a lot of things that they could have done, and that should have been done, in my opinion. As far as um, risk management, that could have mitigated much of this damage. So, David, what did you find?
yeah, so I found quite a bit. You know what's so crazy here, Mike, is that so Aave was prior to this exploit like what a $30 billion, I think,
Yeah,
protocol, and yet a $200 million piece of bad debt could, without this relief fund, take down the entire protocol. It could make them completely insolvent. And so that's just kind of amazing to me. But here's the
yeah.
thing: we need to.
I know almost 50%. I was looking yesterday. Almost 50% of the liquidity on Aave has been removed.
I know.
And in our next story is going to kind of get into that. But go ahead.
Yeah, yeah, that is just absolutely amazing to me. If I'm just looking over here at DeFi Llama, just real quick, not only has a lot of liquidity, exited Aave, but total value locked in DeFi is down significantly since that exploit. If we just take a look, just real quick, I'm just looking on my own. Aave's sitting at 14 billion now. It was
Yeah,
almost at 30.
yeah,
Just literally a couple of days ago.
yeah,
So that's a big deal. It's amazing to me that Ethereum hasn't just cratered yet. I'm still waiting. I'm still waiting for Altmageddon here. But the thing about eigenlayers, so it's understandable, I think, for us to look closely at who is and who is not stepping up right now
hmm,
to contribute to this DeFi United Relief Fund. So, in order to understand why Eigenlayer maybe isn't contributing right now, and why they're not writing a bailout check, I think we have to understand what they actually do. So EigenLayer is this foundational restaking protocol on Ethereum. Now, if there's some exploit of EigenLayer, then ETH could just blow up, and not in a good way. EigenLayer essentially acts as a decentralized marketplace for trust. So it allows users who have already staked their Ethereum to secure the Ethereum network to then restake that same capital to secure other third-party decentralized applications, networks, or Oracle services. These are known collectively as actively validated services, or AVSs. So EigenLayer is the foundational protocol that supports these services. Now, have you seen that Jenga tower, Mike? Where they're saying, "Hey, you got this big Jenga tower, you got this one little block at the bottom," and it's that's yeah, yeah, everything's built on top of it.
Mhm.
So yeah, it's the thing here for me is, it wasn't EigenLayer's core smart contracts that were breached. That wasn't what happened. It was a cross-chain infrastructure and verification failure. But to see all of these big players coming together to support Aave and keep it from collapsing, and EigenLayer is a big player, but they're not contributing anything. Um, I think that that's not a good sign anyway, not in my opinion.
No.
But it's not necessarily a lack of community spirit. I think what they could be doing is just reflecting where the fault lines actually lie in this modular architecture. So the failure occurred at the bridge verification layer, not the restaking layer. But given how deeply interconnected all these protocols have become, I think that a foundational layer like EigenLayer should, be part of the relief fund. I think that they should be part of it,
I
and they're
kind
not.
of wonder if there should be like some sort of time lock for like large transactions, like smaller transactions. Maybe not so much because somebody's not going to put in all the work it takes to do an exploit for 10 grand or 20 grand necessarily. But when they're going after hundreds of millions, or over a million or 10 million or whatever, I mean, what's to say that that it doesn't need to come under some additional scrutiny? Even if it's automated, like some AI or something like that has to go through and verify that this is indeed legitimate. And I'm not I'm not a programmer or anything like that, but I would just think that there would, that it wouldn't be too difficult, because this is software to put some gates in there, some speed bumps to slow things down a little bit when half or a third of the liquidity on a DeFi major DeFi protocol is at at risk, or potentially all of it's at risk. You know what I mean?
Yeah, well, I mean, I think that this was fundamentally a failure of Aave's architecture in the first place. I mean, that
Yeah.
was why they were trying to migrate to V4. But even that hub and spoke model is untested. There are a lot of other protocols like Morpho and Euler that use isolation to mitigate risk. Aave did not. And we've seen what happens. I mean, look, Aave is not the first example of a pooled risk money market, going and blowing up.
Yeah.
Euler V1 was exploited, and not in a similar way, but it was exploited. It was a similar type of architecture.
Mhm.
So, it's like, do you isolate the risk with separate isolated vaults? Is that what you do? Or do you do this hub and spoke model like Aave V4 is proposing? Um, I think that the hub and spoke model actually makes a little bit more sense than the isolation. So it just kind of depends on what type of architecture that you like, but it looks like Aave is dying in front of our eyes. That's the way it looks.
As of right now, if it can recover is yet to be seen. This is either a great opportunity to buy the Aave token, or or you're just providing exit liquidity for people that are getting out of it. That's kind of where we're at right now with that. But
Well,
let's
Mike,
we have about 20 minutes left. I'm sorry, do you have something else?
yeah. So think about it this way: if you're an institution and you've been providing liquidity in Aave vaults or markets, earning very little yield, And then all of a sudden, you can't move your funds for a couple of days because the markets are at 100% utilization. And the entire protocol itself is at risk of blowing up. Are you going to, number one, move your liquidity? The answer is yes. And then number two, are you ever going to go back to Aave? The answer is probably no.
No.
So I think it's over.
Yeah. No, I would tend to agree. And our next story, it kind of points to that. So institutional pivot. Bitcoin IRA launches crypto bundles. So amidst the DeFi chaos, Bitcoin IRA released diversified automatic rebalanced bundles. So like blue chips, AI on chain, and DeFi. The significance: Wall Street is moving away from the single asset bets, because that's what a lot of this liquidity was institutional money, playing the DeFi game. A lot of them were, doing, looping and, leverage strategies and things like that to, lever up. So this signals a shift towards institutional level discipline for retail retirement accounts, providing a safe harbor during volatile weeks. So, I mean, you probably have your finger on the pulse of this a lot more than most. I mean, are you seeing shifts of liquidity? Kind of where all this liquidity is going. Is the data supporting this claim?
Well, if we're talking about the Bitcoin IRA bundles,
well, I think more in general, are you seeing the liquidity move from these single asset, positions like on Aave, where people were doing, the arbitrage and things like that to earn on their crypto holdings. Are you seeing them move into like safer bets?
Yes. Yeah. And I see a lot of liquidity exiting the space just entirely. Like, getting off of a protocol like Ethereum and its layer twos. There are people that are going to Tron. I don't know why you would, because if you're talking about decentralization, Tron is not decentralized.
Honestly, I don't think that these institutions care about decentralization.
No, I don't think they do. I think they care about safety and security most.
Safety, security, because that's their legal obligation.
Right.
And they're interested in making money. They don't care about decentralization. They care a little bit about privacy, but for the most part, they just care about making money.
So, what's funny about those Bitcoin IRA bundles, Mike, is that there's a handful of them. There's a crypto blue chip bundle, and the primary focus there is market leaders. Can you guess which tokens are in the crypto blue chip bundle?
I probably can, and they're probably those a lot of those ones that I personally wouldn't touch.
It's hilarious.
That was put out by the U.S. government as being labeled as commodities.
Yes. So these are the assets in one of those bundles: Bitcoin, ETH, Sol, and then somehow Cardano and XRP got in there.
It's
I don't know how.
These institutions, like we were just talking about, they care about compliance. They care about risk mitigation. They have a legal obligation to, the people's liquidity that they manage. So they're going to go with the ones that were given the ominous dominus of being commodities.
Yeah, and there's a bunch of other bundles here too. You've got an AI on-chain bundle, a tokenized economy bundle, a DeFi infrastructure bundle. And, look, it's really difficult to value these tokens even when you know what you're looking at. And so imagine like, a grandma who's got an IRA, a Bitcoin IRA, and she wants to, buy one of these bundles. How are these products being sold to investors? Because, if you've got a DeFi infrastructure bundle and it contains Aave, Uni, and Comp, I'm curious how they're being sold, how they're being marketed to retail investors there, because these are not low risk these are high risk investments, man, like super high risk.
Yeah.
So, and if you take a look at something like the AI on chain bundle, it says the primary.
How are they doing the valuation? We've talked about this multiple times here on the show. Is there's a way that traditional businesses do valuations, and whenever there's somebody's looking to invest in them, or whenever they do like an IPO, things like that. And a lot of these crypto projects, a lot of the blue chip crypto projects, they don't have a real product that is being adopted or that's being bought that is generating revenue or or fees or anything like that. So technically, a lot of these blue chip projects are worthless. Yet they have multi-billion-dollar valuations.
Yeah. And, I don't know what for. If you take a look at what they actually do, many of them, it seems like they don't do a whole lot of anything.
Yeah.
So most of them are just, pure hype and vapor. And hey, we're, right now still in a Bitcoin bear market, and we're in a rally. So we're still like basically at the top of a Bitcoin bear market rally. It looks like, to me anyway. And if this ever rolls over, I think you're going to see those alts that are vapor get really cut. So that's kind of what I'm looking forward to. But this Aave problem, it's a great catalyst for downside. It's just so interesting that we haven't seen it. ETH still at 2315. So there has not been any downside out of Ethereum throughout the course of Aave having this big hole in its balance sheet. It's just so strange to me that ETH has not collapsed in the face of this. But there's still time. There's still time.
Well, it's fun. It's funny that you bring that up because it's almost like you read all my notes before the show and you didn't, because a lot of these, there's a natural progression. So it looks like roughly 8 billion in Bitcoin options expire today. So the conflict, Max Payne, it's sitting near Bitcoin's trading near like 79 ish. We are watching a massive tug of war between market makers trying to pull the price down and structural buyers keeping it afloat. To keep that, to give you some context, there's record buying going on right now for Bitcoin. So whale wallets, so that's defined by wallets with 1,000 Bitcoin or more, have added 270,000 Bitcoin in the last 30 days, the most aggressive accumulation since 2013. Exchange depletion. Exchange reserves are at a 7-year low at 5.88% of supply. The logic, this isn't speculative trading. Bitfinex data suggests this is a structural supply bid as institutions front run the scarcity of the post-halving era. So what are your thoughts on that, David, with the the options expiring and these these different organizations basically doing, and strategy. We report on that all the time. That guy is freaking buying as much Bitcoin as he can.
I love it. I love seeing what Sailor's doing, man. It's just really great to see that. But here's the thing about those flows. Whenever you talk about an options expiration event, I always think to myself, are dealers, facing a gamma squeeze? Because
really quick, let me frame this because you are very knowledgeable about options. I know that that's how you make a lot of your living is trading options. So I just want everyone out there that's watching to understand that this isn't just David talking about how he thinks this is how it works or something like that. He puts his money where his mouth is, literally. And,
well, yeah, no, I can describe to you, what these institutional desks do. So the thing that I think about whenever I see an options expiration event and a lot of notional rolling off is all of these dealers. So Mike, let's say that you're a retail investor and I'm an institution, and you want to buy a call option. Let's say you want to speculate on the direction of Bitcoin And so you're in a TradFi account and you buy a call, right? Well, someone's going to make you that market. So that's me. I'm the institution. I make you that market. So I sell that call to you. That means that I'm short that call. You're long that call. But I'm running an institutional book. And so I don't want to be, a directional with that book. I want to be, delta neutral if at all possible. And so if I'm selling calls, that gives me short deltas. I've got to do something to offset those short deltas. Well, I've got a couple of options here. I could buy spot. I could buy futures. I could, do a combination of those things. And it could be that accumulation by whale wallets could just be institutional flows, and you don't know if they're buying spot Bitcoin because they want to be directionally long, or if they're buying that spot Bitcoin as a hedge against other derivative positions that they have in Bitcoin. So the thing is, though, is that it's great to see institutions buy or large wallets buy spot Bitcoin. That's a positive thing. But it doesn't mean that they're buying it to, scoop up supply in the era of less Bitcoin being produced each day, each block. It could just be a hedge. It could be as simple as that. So, yeah, I think so. BTC Mouse is saying Robinhood giving away crypto gives you pause. Is Robinhood giving away crypto?
Yeah, how do I get in on this?
I know. Where's that free crypto? But I mean, no, it's great. It's great to see institutions buying, but at the same time, it doesn't necessarily mean that they're just buying to get directionally long. It could just be that because of this large expiration of Bitcoin options, institutions could be getting what's referred to as gamma squeezed, where the closer that you get to expiration and the closer that the options that you sold, get to at the money, the greater your gamma becomes, which means that relatively small movements in the price of that underlying asset have a really big and fast effect on your P&L. And so how do you hedge that? How do you hedge that gamma squeeze? Well, one way to do it is to buy the underlying. If you're short a bunch of calls because you sold them to retail, well, one way to hedge is just buy the underlying asset. And that could explain some of that, big buying that we've seen. But I don't know that it's necessarily institutions or whales just wanting to get long, because these guys are smart. And unless we are about to see like a massive bull run in the stock market, just like, plus 25% throughout the rest of the year, unless we're about to see some massive liquidity injection from the Fed, where everyone just buys all the things every day for the rest of the year or the next 18 months, unless we're about to see that, then I think this time is not different. And that this is just still like the early or mid innings. This is like or maybe in like the fifth inning of a Bitcoin bear market. It's not over. It's not over yet. So it doesn't make sense to me that, smart institutional investors would be scooping up Bitcoin to get long in the, middle innings of a Bitcoin bear market. So I would think that all that buying is, either institutions who can wait, or maybe just a hedge against derivative positions. So we'll see if that unwinds.
Well, one thing is, I know historically before Bitcoin conventions, it's there's the buy the rumor and the road to Vegas. So Bitcoin 2026. It looks like 30,000 plus Bitcoiners descend on the Venetian Hotel in Vegas starting Monday, April 27th. So, this Monday to the 29th. The headliners, Michael Saylor, JD Vance, and Ross Ulbricht, via remote. The strategy is to buy the rumor, sell the news. History show conferences often precede a local top. but the 14 trillion assets under management represented at this event suggest a different level of dry powder. So, what are your thoughts on the buy the rumor, sell the news thought process?
I think it makes a lot of sense. So buy the rumor, sell the news around these Bitcoin conferences. It's always been some type of a signal, not always reliable. But the last statement that you made there, Mike, about well, there's a lot more capital this time, and so maybe this time is different. I think that was like the inference there. Well, whenever I hear that,
if I had $1 every time I heard this one is different, I wouldn't be
different. Don't you worry, just buy.
Well, rewind to last year when before October 10th and the Trump coin and all that, and everybody was talking about the potential for a super cycle and all kinds of stuff, and all of us were excited. And honestly, I mean, I kind of fell for it. I'll be honest. It's I saw the institutional money coming in. I thought that was going to stabilize the market. We weren't going to have as big of a drawdown, and just we were moving from a speculative market to a utility market. I still believe some of that. I thought it was going to happen a lot faster. I still see it unfolding, but just not as quickly as I initially thought. So yeah.
So think about the psychology of this. Check this out. So going into an earnings event, let's say, the market has an expectation about the earnings that are going to be reported. And if what is reported, misses the expectations, well, then you could see that stock sell off, or you could actually see the stock get bid if management comes out and has some really great forward-looking guidance. So if we're talking about the Saylor effect with these conferences, Michael Saylor often announces massive Bitcoin purchases during these events. But if his announcement is smaller than what the market expects, it could ironically trigger a sell-off. So if Saylor's going to be buying, he better put on his big boy pants and really fucking go in, man, because if he doesn't, it's just so funny that he could buy $1 billion but a Bitcoin. But if the market was expecting him to buy $2 billion, then that $1 billion purchase could be seen as a bearish catalyst. It was just like
this market is like so freaking emotional, and it's like a long-tailed cat in a room full of rocking chairs. Any time that they hear a creak of a rocking chair rocking, and the whole market freaks the fuck out.
Yeah, I mean, so if we just take a look at the trend of what's happened in these events over the last couple of years, Miami 2021 was the pre-event trend was bullish. Bitcoin was up 12%, and then what happened after the event was sell the news. It was down 7% within 48 hours after the event. That was in 2021. Here's 2024. The pre-event trend bullish. Bitcoin plus 15%. And then it was just a volatility flush after, sideways to slightly lower. In 2025, Bitcoin was damn near parabolic, plus 20%. And then after the event, there was a correction. You had those tariff-related jitters, I guess you could say. And then in 2026, what we're seeing now is, a rally up towards 80K. So the target is, an 80K break on the upside. And if 80K does not break, and really if the trend line resistance doesn't break, and Bitcoin's unable to get back up to its 200-day moving average up around 85.5, if that fails and Bitcoin rolls over during or after the Vegas 2026 conference, I'd be watching 66 as support. So it's going to be really interesting to see how it trades leading up into this event. And
I still got some dry powder that my bet is that we're going to see lower before we see higher, long term.
Yeah, if I take a look at something like MicroStrategy, MSTR has broken out to the upside, but there's a lot of work that has to be done for it to, for the pattern to become healthier. It seems to me like it's just too early in the bear for us to be talking about, a massive recovery of these digital assets. Um, it looks like we've still got months and months of bear market left. Although, if the stock market just breaks out and really starts to rally, I mean, even more than it already has off of those lows from the end of March, if the stock market just breaks out and starts printing fresh all-time high after fresh all-time high, like the Nasdaq is doing today, well, that could give Bitcoin, enough juice to rally a little bit more. If risk appetite is so strong that it's just a buy all the things type environment, well, Bitcoin should rally too. So, I see the Nasdaq at plus 1.7% today. But was there some big earnings event? It looks like Nvidia having an amazing day, plus 5%. Did Nvidia put in fresh all-time highs today? Not quite. Very close though. So there may have been some type of news around Nvidia. Looks like Amazon is printing fresh all-time highs today. Even Meta plus 3%. So, these big tech names putting in monster rallies. I mean, look, even Google is within, just a stone's throw of fresh all-time highs. So risk appetite is definitely out there. The S&P cash index putting in fresh all-time highs as we speak. And yet Bitcoin seems to be lagging these, equities and equity indices. Although Bitcoin is up 22% from trough to peak, over the same period of time as the stock market, Bitcoin is now underperforming the stock market. Stocks are printing fresh all-time highs. They've rallied by, almost more on a percentage basis than what Bitcoin has rallied by, since the end of March when this rally really began. So you got to ask yourself, if you're going to take on more risk by holding an asset that has greater levels of volatility, that's Bitcoin, than the S&P does, but you're going to underperform the S&P over this brief period of time. Like, why hold Bitcoin? That's I'm just, for me, the reason to hold Bitcoin is very clear. But if I'm an institution and I've got a fiduciary duty to my stakeholders to deliver returns while taking the least amount of risk, and I go to them at the end of the month and I say, hey, you know what? I've been holding Bitcoin and I've underperformed the S&P, which has just been printing fresh all-time high after fresh all-time high.
Yeah.
And I took on more risk to underperform. That's a tough sell. How do you explain that to your stakeholders?
No, it is, and long term that might not be the case, but short term, people, if they're seeing that they're losing money, in a riskier asset, yeah, that's going to be cause for concern. So, last thing I want to touch on before we get into the deep dive is, as always, here at the Node, we are critical of, we find the good and the bad in every project. One of the projects I'm most bullish on is Canton Network. But somebody brought up a very valid point today. We keep seeing this, network, getting adopted, and new validators coming online, and new institutions that are signing up and using the network, and and I understand that not all of them are live yet, so the fees aren't being generated to be burned, but we over months now you really haven't seen much movement in the price to the downside or the upside, to be fair. But with all of this adoption, you would think that there would be, kind of an uptrend of fees being burned, and we see that. But with that, we aren't seeing price move. So it's just something to keep an eye on. It's kind of my decision point is potentially going to be around equilibrium. If we get to a point to where we're burning as much as being minted, and we start getting into that deflationary aspect, if in the rest of the market's moving, to the upside, here in the future, and if Canton doesn't start moving, I might, move some of my liquidity into other projects. Like I said, we just have to be realistic. about our investments. No matter how much we like the project, no matter how bullish we are, you have to look at the entire picture, both bearish and bullish. So with
Yeah, well, I
that,
mean, there's opportunity cost in holding a token that's underperforming,
yeah,
so got to think about that too.
absolutely. All right, well, let's kick it over to the deep dive for the AI XBT topic.
Okay, this will be interesting. So, I don't know, Mike, if you take a look at some of the content that AI XBT puts out there,
I
but
do.
yeah,
I'll be
it's really really good stuff, and I want to figure out, well, how in the world is this content produced? What is it about AI XBT that allows it to create this amazing content? So the first thing that I want to do here is I want to run through this piece of video content. That's the first thing that I want to do. And then I'd like to take a look at that slide deck. I think that we will understand the slide deck a little bit better after we watch through the piece of video content. So this is everything about AI XBT. Let's take a look at this.
In the wild west of crypto trading, everyone's hunting for that one thing, alpha, that elusive edge. Well, today we're diving into a story about a new kind of hunter, and believe me, it's playing a whole different game. Okay, picture this. There's this influencer on X, the platform that used to be Twitter, and they have a huge following, like over 400,000 people. This account is a machine, posting constantly, shaping the entire crypto market with its takes. It's become the source for traders desperate to get in on the next big thing. But, and here's where it gets kind of sci-fi, this influencer, this market-moving personality, it's not a person, it's not a team of people. It's a fully autonomous AI agent. So let's meet our main character, AI BitT. This thing is a full-blown AI that lives and breathes on X, and it's adopted this super slang-heavy degen persona. Degen, it's crypto speak for someone who loves high-risk, high-reward trades. And believe me, it's become one of the most watched players out there. We're not talking about some simple chatbot here. This thing is an actual market participant. Okay, so the big question is, how on earth does a piece of code turn into a crypto guru? Let's pop the hood and see what's going on inside this AI's brain. What we're looking at here is a perfect example of a new field called DeFi. That stands for Decentralized Finance Artificial Intelligence. Just think about it. These are AI agents designed to operate right on the blockchain. They're analyzing markets at a speed and scale that, honestly, no human team could ever dream of matching. And the goal here, it's huge. Get this. People have called it the Bloomberg terminal of Web3. For anyone who doesn't know, the Bloomberg terminal has been the absolute gold standard for financial data for, decades. So yeah, this isn't some side project or a cute experiment. They're aiming to build the essential tool for the future of finance. Fundamentally, its process is actually pretty straightforward but really powerful. It boils down to 3 steps. First, it just ingests everything. It's like drinking from a fire hose of social media and community chatter. Then, and this is the genius part, it verifies. It takes all that hype and cross-references it with hard data from the blockchain itself. Is the money actually moving, or is it just noise? And finally, it synthesizes all of that into alerts and analysis that people can actually use. And just look at what this thing is feeding on. It's not just randomly scraping X. No, it's specifically tracking over 400 key opinion leaders, the big voices in the space. It's lurking in private Telegram and Discord chats to get the real community sentiment. And crucially, it's watching those blockchain logs to see if all the talk matches the actual flow of capital. There was this really big moment in its history called the Indigo upgrade. It was a total game changer. See, before Indigo, a lot of people criticized it for being a black box that just blindly followed social media hype. But after the upgrade, it started plugging directly into that hard on-chain data. That's what gave it the power to tell the difference between a real emerging trend and just a bunch of hot air. Okay, so the tech is clearly impressive, but how do you turn that into a real business? Finding alpha is cool, but packaging it into a product that people will pay for, that's a whole other ballgame. They went with a pretty classic 2-tier model. You've got the free version out there on X. Anyone can just tag the bot in a post and get some quick, basic analysis. But the real magic, the good stuff, is in their premium terminal. That's where you get access to predictive models and tools for tracking whales. The giant investors whose moves can literally steer the market. So you want in on that premium tier? Well, getting access wasn't so easy. Originally, you had to own a ton of the project's own crypto token, AIXBT. We're talking 600,000 tokens. Now hold on, 600,000 tokens. What does that even mean? Well, at its peak, that stack of tokens was worth, get ready for this, $450,000. Yeah, that basically made the terminal an ultra-exclusive club for the super rich. So obviously that created this massive barrier to entry. The team realized that and eventually opened up a different path, a subscription model. For $200 a month, you could get in, which opened the doors to a much, much wider group of serious traders. Okay, but let's get to the most important question of all. Does this thing actually work? An AI that prints money sounds great on paper, but the reality is never that simple. So let's really dig into its performance. Let's start with a big win. One of its most legendary calls was for a token called $Pippin. The AI flagged it basically saying, hey, nobody's looking at this, but they should be. It started putting out analyses explaining its potential, and what happened next? People listened. The token's price just exploded. It shot up over 600%. I mean, that's the kind of home run that makes people believe. It's the proof of concept everyone wants to see. But, and this is a big but, it's not always a home run. When you try to nail down its overall success rate, things get messy. You've got one study, which is pretty friendly to the project, claiming an insane 83% success rate. But then you have a report from AMB Crypto that looked into it and said, nope, it's less than 50%. The real answer, it's probably somewhere in the middle. And you absolutely have to talk about the risks, because there are some major ones. First, there's the echo chamber effect. If it's just listening to the same 400 influencers, it could just end up amplifying their hype. Second, it's an AI. It can hallucinate. That's the term for when an AI just kind of makes stuff up or misinterprets data. Third, there's massive platform risk. It lives on X. What happens if its account gets suspended? It's toast. And finally, the really big one, regulatory stuff. An AI dishing out what looks like investment advice? Yeah, that's a huge legal gray area. So let's pull back for a second. What does all of this really mean? Does it make Speedy just a weird crypto niche thing? Or are we getting a sneak peek at the future of, all investing? This is where you start hearing this term, the agentic economy. The idea is a future where AI agents aren't just tools we use to place a trade. They're actual economic players themselves, buying, selling, negotiating, and creating value completely on their own, on-chain. And if you look at it through that lens, suddenly AsyncBT isn't just some clever trading bot anymore. It's one of the biggest real-world experiments in this whole new economy. It's testing the absolute limits of what these autonomous systems can do in a live, high-stakes environment where real money is on the line. And that really leaves us with a huge lingering question, doesn't it? As these AIs get smarter and more woven into our financial world, the whole idea of trust gets really complicated. When an AI is running the market, who do you actually trust? The code? The people who wrote the code? The community using it? It's a question we're all going to have to figure out, and probably a lot sooner than we think.
Okay, so that was quite interesting to me. Just whenever I read the content that AIXBT creates and publishes on X, I'm always thinking to myself, how in the world is this created in the first place? Because some of it is just so good. If we take a look over here at AIXBT, this is the agent's page. There's a lot of really, really solid content on here, I think. So, Mike, we were talking about Bitcoin exchange reserves. Well, take a look at all of the pieces of data that are pulled together to create just this one post. So one, it's got some historical data. Number two, it's got, the amount of Bitcoin on exchanges right now. It's got BlackRock's IBIT and how much it's pulling in BTC per day. It's let's see here, ETFs and MicroStrategy pulling some amount of Bitcoin off exchanges. It's calculating the percentage of the supply locked into structures. This is pretty amazing that it was able to write this up. And I just wanted to understand, where is it getting the data to be able to do this? So that's one thing for me. But if we just scroll down some of these posts here and take a look, there might actually just be some alpha in the free stuff. So here's an example, all right? So EtherFi, I really like the EtherFi protocol. And EtherFi committed, and look, this is great, committed 10,000 ETH to the Kelp bailout. That's, the Aave, the DeFi United initiative that we were talking about earlier. But, and here's a big problem. There's going to be 110 million new EtherFi tokens unlocked into the circulating supply of 115 million tokens. So that's like a nearly 100% dilution. So it flags this, and this is alpha to me, because if I hop on over here into TradingView and I take a look at the ETHFi token, and if I know that there's about to be a massive, basically like 100% dilution of ETHFi.
That's definitely that's something that could push it to the downside.
Right? And that's solid data. It's really, really great to know that. So, if I'm taking a look at the chart of ETHFi here, and I just look, this level, yeah, I know, right? So this level right here,
terrible.
yeah, this is the flash crash low. So this level right here, if I just bring this horizontal down 8 cents, it's trading for 45 cents right now. So, this could be an interesting opportunity if it actually starts to break lower, because that's 80% to the downside to get to that level of support. So the next thing that I would be thinking about is, okay, well, when is that token unlock going to happen? What is the potential catalyst date for that? Is that already priced in? I think it's probably unlikely that it's already priced in, but this is just a great example of how we can use these posts to get trade ideas. This is actually really valuable. If we continue scrolling down through this, I think that there was a post here about GMX. So GMX is my favorite decentralized perpetual futures protocol, and it's actually decentralized, unlike Hyperliquid. So GMX launched these, oil, gold, silver, gas perpetuals with 100x leverage, and that is pretty darn cool. If we take a look over here at GMX and we hop in and we take a look at RWAs, check it out, WTI, Brent. So I wanted to be able to trade these against each other, and unfortunately here on GMX, or maybe fortunately, depending on the way that you look at it, you can't really use cross leverage here because these are all isolated pools. You see, the architecture of GMX is such that you trade against a liquidity pool. So if I'm trading WTI and I want to be able to trade the spread, maybe I want to be able to trade the WTI Brent spread. Well, you kind of sort of could do that, but not with cross margin. So that kind of negates, you wouldn't really want to do it if you're isolated. But you can trade natty gas over here. So you can trade nat gas, you can trade Brent, you can trade WTI, you can trade gold, all these commodities. The next thing would be to be able to trade, and look, this just launched. So, this launched 2 days ago. So this is just, the chart of nat gas over the last 2 days. But, going into the summer, usually you see nat gas sell off into the summer months. So this is really great here. This is just, alpha, in my opinion.
Well, it's like investing in Budweiser and Coca-Cola, when they start going into the warmer months, because more people are going to be out barbecuing, and they're going to be buying more beer and drinking more beer and drinking more soda and stuff like that. I know that Warren Buffett, that was one of his plays was, he bought stuff seasonally, like natural gas during the cold months. Everybody's buying it to stay warm.
So but you see, I'm reading through this post here, and there's one problem with what I'm seeing. So it's talking about the perpetual futures contracts, the RWAs, right? And then it says 1.18 billion in volume and $790,000 in fees in 1 week. So that's 41 million annualized on a $70 million market cap. So it's saying 1.7x price to sales. And Uniswap traded at 15 to 20x during peak fee generation. So now it's saying, hey, well, the GMX DAO has bought back 138,000 GMX tokens at an average of $6.35 since March. So it says that it's deploying protocol revenue and creating a soft floor. Well, why don't we actually just take a look at that GMX token itself, and let's see, what does this look like? What does this pattern look like? Well, look, this is crypto. And so just because this thing is trading near its all-time lows does not mean that we can't see some type of real crazy parabolic rally like it's exhibited in the past. We absolutely could see this thing just rip and push sharply higher. Look, when I'm taking a look at Bitcoin here, because I view everything through the lens of what Bitcoin is doing. At the end of the day, Bitcoin does lead this market, I believe. But if I think that Bitcoin is going to push up to its 200-day moving average, which is kind of what I think, actually, I kind of think that this cycle is going to be no different than last cycle, and we're going to see Bitcoin test its 200-day on the upside. So if we get a test of the 200-day on the upside, that would likely mean that Ethereum would, push up to its 200-day moving average. And, its 200-day moving average is what, like 20% to the upside from here? So if we get that pump, then alts are going to rip. But I still think that that would be a bear market rally. So if we're taking a look at something really super speculative like GMX, and if there is more gas left in the tank for BTC up to its 200-day moving average, well, then this GMX token, this thing could really run. We're talking about potentially like, multiple X's out of this because it seems to be super illiquid. But, this thing could really, really rip to the upside. And it wouldn't surprise me to see it do so. But this is all coming just on the back of AI XBT posts, really interesting posts here. So this is, I think, great value being provided by this bot. Here's another one. So taking a look here at Centrifuge, CFG. So, the TVL up 52% in 30 days. This is kind of interesting to me that, this Centrifuge protocol, because this allows you to essentially borrow against your invoices, I believe. So why don't we take a look at the CFG token? I think that could be interesting to look at also. CFG USDT. So here's the
Centrifuge as a whole is a tokenization platform.
Right. And what I see here, Mike, is Centrifuge. This pattern to me, it's trading above its 200-day moving average. So let me grab this arrow tool. So there's the 200-day moving average. It's trading well above that 200-day moving average. And all it needs to do is break out above this level, 41 cents. A breakout above 41 cents, and all of a sudden, this pattern starts to change. That would be a swing to the upside. You get above 41 cents, and then you could start talking about 51 or even $1.20. And this stuff can rip like quickly. All that it takes is for Bitcoin to put in a couple of nice candles on the upside. Like Bitcoin, there needs to be some exuberance. You need Bitcoin to rip like 5 or 7% in a day. And then you start to see that rotation into alts where, you have your watch list up and you'll see, okay, altcoin, 1 of 30 on your watch list plus 100% over the course of a week. And then you start to see other alts popping by hundreds of percentage points. So it's really, I think, just a matter of waiting to see what Bitcoin does. Because if this cycle is no different than last cycle, and we see Bitcoin rally up to its 200-day moving average like we did last bear cycle, which turns out to be a selling opportunity, but on the way up there, you could see some alts really outperform. So if we take a look at something like total 3 minus USDT in Bitcoin terms, this is a chart that Ben Cowan has really liked to bring up, and for good reason, because it basically shows you how altcoins have performed in Bitcoin terms, basically this entire bull, or this entire cycle. And I mean, this is not exactly what outperformance looks like. So if I wanted to like throw down some type of trend line here, I would probably go like this and then clone this thing and create a channel. And you could cut some of this price action off up there, and maybe something like that, and make that a false breakout there. So if we do that, well, then what would need to happen here for this chart to push to the upside? Because as of right now, it looks like there is not going to be any rally out of alts. If I'm just looking at this chart here, it makes me think that alts push lower in Bitcoin terms. And I think that they do. But could there be a handful of alts that put in some nice, decent rallies? If Bitcoin's able to make it to 86K, its 200-day moving average, I think so. I think so. And so could this push back up to resistance? Sure, it definitely could. It's just something that I'm thinking about into the Bitcoin conference, in a couple of days here. Maybe we get a nice rally out of Bitcoin up to its 200-day, and we see a couple of alts really outperform on the way up. One of the things that makes me think that we might not see alts outperform on the way up, though, Mike, is the underperformance of Ethereum. So if we just take a look at this, this is ETH in Bitcoin terms. And, Ethereum in Bitcoin terms has done nothing but move lower, the entire cycle. We're talking about from the end of the last bear to today, ETH has done nothing but underperform Bitcoin. If you had sold your ETH for Bitcoin at the, during the last bear, you would have gotten 3 times as much Bitcoin for your ETH as you could get today. So, that's not good for Ethereum holders. That's massive underperformance. And this pattern to me, and, Ellie and I entered a trade, trading this pair yesterday. This pattern to me looks like, okay, number one, we're underneath this trend line resistance. We're also trading well below the 200-day moving average. Bearish pieces of information. Support comes in down below about 15% lower. If that support fails, then this thing could really dump. So that's ETH in Bitcoin terms. We're not necessarily talking about the US dollar pairs. So in my opinion here, I'm just thinking to myself like, well, the only way that alts could put in a temporary rally is if Bitcoin makes it up to its 200-day moving average. And leading into that Bitcoin conference in a couple of days, could we see a rally? For sure, we absolutely could. And that's kind of what I'm thinking about here, is probably see some type of a continuation of this rally over the next couple of days. But it ends up being a selling opportunity because this time is not different. Regardless of what people say, well, institutions and ETFs and, Michael Saylor, and, that's why it's going to be different this time. I don't think it's going to be different this time. I think this cycle is going to play out just like last cycle, just like the cycle before it. And, hey, this 200-day moving average, if we get up there, could be an excellent opportunity to get short. So that's what I'm thinking about here. Now, Mike, I did put together some content on the Hermes agent,
Nice.
which I'm kind of interested to play for everyone. So I don't know if you want to just kind of shift gears into like an AI agent a little bit here.
Yeah,
But this is
it's not the same topic as the AI XBT.
Yeah. So it's the same type of content. And we were talking about OpenClaw, or at least I built several OpenClaw agents over the last couple of weeks. And, look, they work, but they're temperamental and kind of expensive to run, if I'm being completely honest. Now, I think the expense in running them is my mistakes that I've made in the architecture on Google Cloud, which I'm, rectifying today and over the weekend. But, I'm curious about these Hermes agents because the OpenClaw agents break a lot and they hallucinate a lot. So, they'll basically tell me, they'll literally make shit up. Like, dude, it's the hallucinations that I get from the OpenClaw agents are unlike any other type of hallucination that I've ever seen from an AI, from a bot, because it will literally just completely make shit up, like not
Oh,
even close.
that whenever I was using it with Cursor and stuff like that, it would just I would ask it to do something, and it would do that plus a bunch of other stuff. And I'm like, no, just do what I asked you to do. Don't make up stuff to do.
No, it's hard, man. It's difficult to set the guardrails properly, so that, and even when you do, sometimes these agents continue to operate outside of the balance. But that's why I'm curious about this Hermes agent, because maybe I can just migrate all of the OpenClaw agents that I built over to this different architecture. So let's take a look at this. This will be interesting.
Today, we're diving into something that could literally change the game for how we use AI. It's an agent called Hermes from a group called Gnosis Research. And get this, it doesn't just do what you tell it to. It actually learns from its own successes. So let's break down how this one agent is about to completely redefine what we expect from our AI. But first, let's start with a feeling I'm pretty sure we all know. You know that feeling when you're explaining your project, your workflow, your exact preferences to an AI assistant for what feels like the 100th time? Every new chat, it's like starting from scratch. Well, that frustration, it points to a massive fundamental limitation in almost all the AI we use today. And really, that whole limitation boils down to this one simple difference. On one hand, you've got what's called a stateless agent, and you can basically think of it as an AI with the memory of a goldfish. The second the task is over, poof, it's gone. But on the other hand, you have the persistent agent. This is something totally different. It's more like a partner, an apprentice that actually learns and gets smarter with every single thing you do together. And that difference is everything. All right, so let's really dig into this goldfish problem. The thing is, almost every AI agent out there right now, even the ones built on really popular frameworks like OpenClaw, are stateless. They're all suffering from a pretty bad case of digital amnesia. So what does that actually mean for you? It means every single time you start a new session, you have to do a full re-onboarding. You have to give it the context, the files, the rules, all over again. Now, this isn't just annoying and inefficient. It is super expensive. The source material points out that this constant repetition can waste hundreds and hundreds of dollars in tokens over time. So how do we fix this? Well, this is where the Hermes agent from Gnosis Research comes in. It's an AI designed from the ground up to solve one thing: to remember. The secret sauce inside Hermes is this brilliant idea called the closed learning loop. Now, this is way more than just saving your chat history. It's a proactive system where the AI actually looks back at what it did right, analyzes its own successful moves, and figures out why it worked. Also, it can do it better and faster the next time. And this learning all happens in this really elegant 5-step cycle. You see it here. First, it gets a task. Then, and this is key, it retrieves relevant memories. After it figures out a plan and acts on it, it gets to the two most important steps. It documents the winning strategy, and then it saves that new knowledge permanently. It's a constant recursive loop of getting better. And this isn't just theory, right? It makes a huge measurable difference. The data shows that because of this learning loop, Hermes is a full 22% better at recovering from errors or when its own logic breaks. So instead of just getting stuck and giving up, it actually learns its way out of the problem. Okay, but how does all this learning actually stick? How does it become permanent? Well, the agent doesn't just remember in some abstract way. It literally writes its own instruction manual. And the trigger for this is really smart. The agent isn't just documenting every little thing it does. That would just be noise. But when it successfully pulls off a complex task, which it defines as anything requiring 5 or more different tools, it automatically pauses, reflects on that win, and creates a brand new skill file. And this skill file isn't just a simple note. It's a whole structured directory. It's got the core instructions, any code it wrote that worked, and links to all the relevant documents. It's basically a complete reusable playbook that the AI can grab and run with the next time it sees a similar problem. This phrase, right from the project's own documentation, just captures the whole idea perfectly. You're not just using a static piece of software anymore. You are cultivating a dynamic partner that literally evolves and adapts to your specific way of doing things. But look, remembering how to do tasks, that's just level 1. The most advanced and frankly mind-bending part of Hermes' memory is how it starts to understand you. It's a system with a wild name, Huncho Dialectic User Modeling. And this is where things get really futuristic. This is not about remembering your favorite color. This is a deep reasoning engine that is actively trying to build a mental model of how you think by studying your patterns, your goals, and even the way you talk to it over time. And this is all powered by a team of 3 little agents working together inside the system. You have the deriver, which is like a note taker, just pulling out the explicit facts. Then you have the dialectic, which is like a detective, looking for the hidden patterns and connections. And finally, you have the dreamer, which works in the background, kind of like a subconscious, piecing it all together into a unified model of you. So, when you put all of this together, what do you actually get in the real world? It means your AI stops being a tool and starts becoming a true evolving partner. This head-to-head comparison just makes the deep philosophical difference so clear. OpenClaw is built around managing teams, with pretty passive memory. It's also got a pretty long list of security issues, 138 tracked vulnerabilities, or CVEs. Hermes, on the other hand, is built entirely around that learning loop and active modeling of you, the user. It's designed for deeply personalized work, and it has a clean security record. And this quote from the analysis just nails it. It says that after a few weeks, Hermes stops being a reactive chatbot that you have to constantly micromanage. Instead, it becomes an operator, an expert that's been trained specifically on you and your unique digital world. Which kind of leaves us with one final big thought. This tech completely changes the question from what can I ask my AI to what can I teach my AI? So if you had an assistant that could genuinely learn and never forget, what's the very first complex thing you would teach it, just so you would never have to do it yourself ever again?
There's a lot.
Newsletter.
Well, I mean, and not just the newsletter. There's a lot of things.
No, just that's what I would do, because I mean, that's the thing that I do every morning manually. So it'd be nice to have the an AI agent that learns and gets better and is continually improving that product.
That would be pretty cool. Maybe I can do that. Apply like a Hermes agent to producing the newsletter. Maybe. But yeah, no, I mean, what I took away from that piece of video content was this one little slide here where it's comparing Hermes to OpenClaw. I think it was right here, not the Honcho modeling, but a little bit further back. Might have been here somewhere where it's comparing them. Here we go. This. So the security problems for OpenClaw, it's not just 138 tracked CVEs. It's also that this thing breaks. It breaks all the time. OpenClaw, and then after it breaks, it lies. It just hallucinates. So like it'll break, but it'll tell you, oh, it's all good, man. No, we're running.
Working. It's good.
I'm totally working. What do you mean? It's just not true.
Yeah.
So that happens a lot with OpenClaw. I think what I'm going to do here, Mike, is I'm just going to migrate. I think what I'll do is I'll start by migrating 2 of the 4 agents to Hermes, and I can probably just do all of that right now today. Now, here's how I would go about doing it. The first thing is I would hop into Gemini, and I would say, write me a prompt for Gemini Deep Research to learn everything about the Hermes, I guess you would call it agent, the Hermes agent, and how to migrate from OpenClaw to Hermes on Google Cloud Architecture. So Google Cloud Architecture, that's what we're running this on. And so what I want to do here now is I want to add some context. And I've already got that AI agent context about Hermes, great. So I've got it in fast mode. I want to go ahead and throw it in pro so that it'll give me a better output. And I'm just going to hit go. And so this is just going to write a prompt. So all I'm doing here is literally just starting by writing a prompt. And then I'm going to take that prompt, I'm going to recursively feed it back to Gemini Deep Research. And then that way I will get a much higher quality output. The research report will be much, much higher quality by first, generating a prompt using the AI itself. And so now I've got the prompt. Here we go. So I can go ahead and copy this prompt here. And there we go, just that bit. And then I'm going to go ahead and change this into deep research mode, new chat. I want to make sure that I got it in pro, and I'm going to paste in that prompt and hit go. And so the resulting output from this is going to be what I'm going to use in my code base to migrate some of our AI agents off of OpenClaw and onto Hermes. And this entire process should take only a couple of hours today. I bet I'll have it done by 4, which is when the markets close, and I do the
market wrap.
Market wrap. So here we go. I hit start research, and that's it. Now just sit back and wait for this research report to complete. So once this is complete, then what I'll do is I'll hop into Cursor and I'll feed that to Opus 4.7 in Cursor as context, so it knows where to begin. And then I'll use this to migrate. I think I'm going to migrate Bob and Anna, those 2 agents that I built. I'm going to migrate them off of OpenClaw onto Hermes, because it's been really, really difficult to manage the expenses for these agents on Google Cloud hardware. And if they're not even consistently working properly, then I've got to do something about these agents here. So that's what I'm going to do, and I think it'll be pretty darn cool. So here, let me bring it back over here to markets. Now, Mike, is there anything in particular that you want to take a look at here? Any assets, any charts that you want to check out in our last 15 minutes or so? Anything that comes to mind for you?
Obviously, I'd love to maybe see. Actually, you know what? Somebody in the chat, I was wanting you to look at Arrow just because it's been doing some good, positive movement lately. But hold on, somebody in the chat was actually asking, where is it at? ISM index is moving up. Thoughts on that?
Sure. So the ISM, that is the like supply managers, right? So isn't that a measure of manufacturing output? ISM index, and isn't it when that index is consistently above 50? That's a sign of expansionary manufacturing activity. And I think that there's a couple of guys who have tied the ISM index to the performance of some digital assets. Famously, Raoul Pal was one of them, where he said everything is based on this cycle, and it's all driven by the manufacturing cycle. And so we get a banana zone or whatever when the ISM index is firmly in expansionary territory. That was part of his whole don't fuck this up thesis, right? It was all about the ISM expanding, and that never happened. So we never got the banana zone. And that's why when you take a look at that chart that Ben Cowan likes to share of total 3 minus USDT in Bitcoin terms, when you just take a look at this chart here, this is why we never got a true alt season. So, we never really got that true euphoria on the upside. Now,
trust me, I know it's. I mean, I made a little bit of money, but yeah, I mean, my portfolio, is not down as bad as a lot of people's, but I'm still down.
Well, I mean, the thing about alt season isn't that just driven by euphoria in Bitcoin? And if we don't get the Bitcoin, parabola on the upside, then
we got some of that though. Bitcoin at the bottom was around like 16K, and we got up to 125K, and then we were waiting for Ethereum, for all of that liquidity to roll over to Ethereum like it historically does, and that just never really happened. We got a little bit of a rally out of the ISO tokens, XRP, XLM, HBAR, all those ISO narrative tokens. And then, like we've said before, the Trump coin came out and everybody freaking aped into that, and that liquidity got sucked out of the market. And then, kind of as a 1-2 punch, the October 10th happened, and we just never really had a bull market after that. We just kind of trended sideways and down to where we are now. So, I mean, I never really got an opportunity other than my XRP and all those ISO tokens. I mean, I made some decent money on that, but other than that, basically I sold that rally and got into DeFi stuff, and hoping that those were kind of the blue chips that I was seeing that were in. So I thought that the next stage was these small caps, and a lot of these DeFi protocols and stuff like that. So I rolled my profits into those, and we just never saw it. A lot of these charts that you're showing, like GMX and these other ones. I mean, it's just been down, 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 down.
Yeah, and if we take a look at a chart here of total DeFi market cap, you see something that doesn't exactly look all that bullish. I mean, I've got this level of trend line support here. I can go ahead and remove these horizontals just real quick. Now, these are essentially Ethereum protocol tokens for the most part, like total DeFi, these DeFi tokens. So, this pattern, this is a bear flag. And this is a bear flag below what was support. So this is a bear flag trading below a level of resistance.
It's a bearish bull flag.
Yeah, it's bearish. It looks pretty bearish to me, but if we get some type of a rally out of Bitcoin to its 200-day moving average, then we probably see a rally out of this to its 200-day moving average also. So that's, I'm just sitting waiting for a bit more of a rally, to be completely honest. That's kind of what I'm thinking here. But if we just go down the list, there was one that looked kind of interesting to me. I saw some news about TON.
TON coin?
Yeah, TON. So this one, I happen to like Telegram. It's pretty useful as a platform. The built-in chain has a ton of users, right? So there's but I'm just kind of curious, like because I don't really know a whole lot about TON. So one way that we can learn about TON is I can just do a deep dive research bit on it right now, and I can do this much more quickly. To learn everything about.
We've got about 2 minutes.
The TON token and chain and its tokenomics. Okay, and then I'm just going to throw this into fast mode so that we can get this done quickly. But I think that'll be kind of interesting to learn about TON. Here we go. So I'm going to go ahead and copy this prompt, and then I'm going to pop it back into deep research mode in fast, and I'm going to hit go. And so this actually should be done in a minute or two. And then once this is done, we'll be able to generate like a slide deck, and we can learn a little bit about TON. Because if I'm just, taking a look at the chart, many of these altcoins are getting close, within 30 or 40% of their bear market lows from last bear. So that's basically like the level where I want to be buying these things, is at their bear market lows from last bear. But I really just want to put together a shopping list of alts for myself, because my plan is to go, heavy into BTC, but I also want to have some moonshots. You know what I mean? Just like,
because I mean, even if you're invested in like 5, moonshots, if just one of them hits, and you get, and it outperforms, Bitcoin, then potentially you're gonna make more money on those. So, but and of course you don't just want to pick any old meme coin or anything. You want to pick some strong contenders that like we talk about, that they have a actual business or product that they're selling, and it's generating revenue and fees and things like that. Treat it like an actual investment. But there's a lot of potentially great opportunities out there, and I know that Telegram is what we use to communicate with the bots.
Yeah, it is. And I know that there was a post by AIXBT about TON. I know that there was one recently here. but I don't recall where it is. You know, this was actually kind of interesting. So
Well,
MEXC,
actually, just sorry, really quick. Nick Dunn brought this up. He has a bonk bot on Telegram. So much easier to trade Sol meme coins on. I actually saw this last cycle. There was a lot of people that were doing this to front run. A lot of the meme coins that were launching on Sol. So remember, you know how we talk about the people that get in like super early before anybody else. That's what a lot of people were doing, is using those bonk bots to get in on these meme coins before people could go on platforms and jump through all the hoops to buy them. They could just, with a couple of clicks, they were in, and then when that rush of people showed up, they made a lot more money than everybody else. So
yeah, you know, you got to be early, and you also got to be ready to exit.
yep.
You know,
And the bonk bot does that as well. You can tell it, I want to take, so much out of this level, this level, this level, this level, and, basically ladder out, and it will execute those automatically.
yeah,
Lightning fast. You don't have to worry about if and sometimes people are talking about even when the markets crashed or the platforms crashed, due to volatility and stuff like that and locked up, that they were able to execute, their buy and sell orders.
yeah. Well, that was for a while there. You couldn't get anything done on Solana unless you were using one of those bots, or
Yeah.
if you were on a DApp, you had to set the gas to like ridiculously high levels just to be able to get your transaction to process. Solana was basically unusable during that period of time. I think that was like, what was that, like December, January of like
during all that
2020
meme coin frenzy.
yeah, of like 2024. Yeah. But this is kind of interesting. So remember we were talking about, those big, not necessarily institutions, but protocols who had these loops on Aave. One of them had an SUSDE USDT loop. And the amount of money that was being accrued each day in interest to like $100 million.
Yeah.
I mean, look at this, man. So this is MEXC. So this is according to AIXBT, and this is yesterday. So I
actually read that one.
Yeah. So I'm wondering, like, 260 million in a USDC USDE loop. So, when I was walking through this stuff with Ellie yesterday, and we were talking about, the first token in the pair, that's your collateral. The second token, that's your debt. So if I'm supplying USDC and borrowing USDE on Aave, why don't we just take a look and see what that interest rate arb actually looks like right now? Because that it might be kind of interesting, right?
Yeah.
So, and then what we can actually do too is we can calculate the spread, because I've got this this tool that I built, which I use for teaching private clients. But this tool that I built has these really cool little calculators built into it. So what we can do is we could actually figure out what MEXC's position is over here, if it still exists on Aave, and see what their spread is. So if I'm assuming that they're probably here on mainnet, so if they are supplying USDC and borrowing oh my God, that's horrible. Look at that. So if you're supplying USDC, you're earning 7.59%. Dude, Mike, the longer that these markets remain totally fucked like this, the more damage is going to be done. I know that ETH is not rolling over. Like I know that ETH is still hanging in there, and so is Bitcoin. But when I look at these markets, like Aave is broken. Aave is completely broken right now. Like, yes, it's no longer sitting at 100% utilization, but pretty damn close. And these interest rates, it feeds through the entire system. So this is really, really not good. So if I'm supplying USDC earning 7.59%, but I'm looping it against USDE paying 12.32%, we can take a look. Yeah. Yeah, you're losing a lot. So let's
And,
pop.
and you know, stack on top of it, you're locked in the position. You can't unwind your position.
Well, I mean, you might be able to, maybe, but if we just, take a look back on
Well,
over
that's
here
what
at
that
Aave.
AIXBT post was talking about was, basically they're stuck in the position. They can't get out of it. And so they're paying like $100,000 a day, because of, their looping, is working against them right now.
Yeah, it's really, really working against them. So if
Yeah.
they're paying 12.32% to borrow, yeah, let's just take a look at that. So this is called unprofitable. this is this is what you don't do.
Let's not get too technical.
Right? And so the last thing that we need to know is what's the LTV? Like what are they able to borrow at? How much leverage are they able to use in this USDC market? Well, 75% LTV. So we hop back on over here to the calculator and we're going to dial this back to 75%. That's 4x leverage. So if we know that they can use 4x leverage, which they probably did, then all of a sudden that yield they're paying 19% APY to keep that position open, which I guess turns out to be like $100,000 a day on a $260 million position.
Yeah.
But just think about what this is saying in this post, though. So MEXC, that's a big exchange, sitting on 260 million in a USDC USDE loop on Aave v3 at a 1.01 health factor. So
we haven't seen potentially all the fallout from this, because like MEXC is a decent sized exchange. What happens when they get liquidated?
Well, so I think if I'm understanding this correctly, it may not be that they just looped USDC and USDE. They could have done that, but the reason why I think that that might not be what is actually going on here is because the agent here says 6 to 8 days until forced liquidation if ETH doesn't move up and they don't add collateral. So what that means to me is that they're actually running a levered long position where they're supplying ETH. It says 260 million in ETH or WBTC collateral hitting the market in a cascading liquidation is the next black swan everyone can see coming on chain in real time. The Kelp exploit was round 1. So it looks like this is just a levered long, which makes it even worse because you don't earn any. Number one, I don't want to be levered long right now. I mean, maybe it's working for MEXC, but it doesn't look like it. 1.01 health factor for a levered long position. That's horrible. That's super dangerous. But they're saying that ETH and WBTC is their collateral. So if ETH and WBTC is the collateral, well, how much are you earning to supply ETH? 4.3%. And if you're borrowing USDC against it, that's a 4% spread to the bad. That's, you're paying, that's a 4% carry that you're paying. Multiply that by whatever leverage you're using. And all of a sudden you can get up to 16 or 20% APY negative carry. So that's horrible. And if we take a look at wrapped BTC, you earn nothing to supply wrapped BTC. And so that means if you're borrowing like USDE against wrapped BTC, then you're paying 12.3% times your leverage. So yeah, if you're not earning anything on your collateral and you're paying 12.3% to borrow and you're using 4x leverage, then you've got a negative carry of greater than like 40%.
Well, it's like 48.
Which is crazy. It's crazy town. So, I mean, would an exchange like MEXC allow a levered long position like this to be forced into liquidation? I mean, I have a hard time seeing professional traders allowing that to happen, but maybe, so this is just really interesting how this agent is able to produce, valuable alpha like this. And
one thing I want to stress from this, and my takeaway from this is, we haven't seen the full fallout.
No.
I mean, David was talking about the other day where, after it all went down, we didn't see the dump in Bitcoin. We didn't see the dump in ETH. We didn't see anything dump. It was the opposite. It actually kind of went up a little bit. And I kind of wonder if, some of these, market makers were trying to push it up to ease some of the pain, like David was just going over, where he was saying it relieves a little bit of the liquidation pressure if they can force the price of ETH up. So, there's a lot, of, negative things. This could still be, quite the black swan that hasn't, fully spread its wings yet. So keep that in mind.
It's not over. This is not over. If these interest rates over here on Aave are still so ridiculously high, and this is, I don't think we've seen the event yet. The layer 0 Kelp DAO thing with Aave.
Well, once a lot of these big positions start getting liquidated, I think that we're going to start seeing, kind of a chain reaction of events because, like you were saying, I mean, MEXC, losing a couple $100 million, what's that going to do? What's that going to do to their platform? It's. I don't want to freak people out, but me personally, if I had a bunch of money on some of these platforms that have massive amounts of liquidity stuck on Aave, I might think about getting my liquidity off there for a minute. I don't want to make the problem worse, but our obligation here is to educate you on the potential risks and things. Do whatever it is that you're going to do, but you might want to be on the sidelines right now. Have your stuff in your wallet. Not sitting on a protocol or on an exchange.
Yeah, because I mean, Mike, we're literally watching Aave implode in real time. If we just take a look at Aave's TVL, I mean, this is what do you call this? A waterfall?
Yeah,
looks like a crash to me.
No, last I looked, it was almost 50% of the liquidity has been yanked off of Aave.
Went from 27 billion to right now just over 14 billion.
Yeah, about 50%.
And it doesn't show any signs of stopping, and I don't think it should, because the markets in Aave are still broken. So that means that
I think the only reason it's not worse is that a lot of it's locked. A lot of people are locked in. I think it would be a lot worse.
Yeah, well, on the layer 2s, it's still pretty horrible on those layer 2s, because I'm pretty sure that, they're still locked up on those layer 2s, at least the ETH markets. So if I take a look at frozen, yep, the ETH market on base is still frozen. I'm pretty sure it's still frozen on all of the layer 2s. Yep, still frozen on Arbitrum and Mantle, I'm sure. Yep. Still frozen on Mantle. So, we're talking about like $500 million or $600 million of ETH just frozen on base, Arbitrum, and Mantle. So like, what the hell? This is, you can't, institutions are never going to trust Aave ever again. This is game over for Aave.
Really, the only way I could see that possibly that they could is, I mean, they would have to like totally reinvent their architecture, approve, this, a hub and spoke model of V4, and it would be a slow process, but they would need to win back the institutional confidence in the platform, which, like David was just saying, is almost potentially irreversibly damaged.
Well, here's V4. This is Aave V4, and I mean, even this, these rates for USDC and USDT, Go seems to be doing okay, fairly healthy, but there's not much liquidity here. We're talking about just a couple thousand ETH, which, compared to Aave V3 is nothing. And yeah, this is also untested. This model, this hub and spoke model that Aave has built for V4 is untested. So yeah, I don't see how this can continue for much longer. You know, it's already been what, 5 days, I want to say? Isn't this day 5 without
Well, I just looked up a couple of. I asked. And fact check this, but centralized exchanges and integrated liquidity. Centralized exchanges utilize Aave to generate yield on their native stablecoins or to provide users with earn products. Binance and Coinbase. These exchanges are heavily integrated via their wrapped assets. The Coinbase wrapped BTC and WBTC represent approximately 12% of Aave's total TVL. Centralized exchanges often lock up these assets to ensure deep liquidity for their users who bridge assets on chain. Upbit and BitThumb, South Korean exchanges, have become pivotal following the listing of the Spark protocol and Aave SubDAO. Significant KRW linked liquidity has moved through Aave related ecosystems. Liquid staking providers, institutional grade staking providers like Lido and EtherFi have billions locked on Aave. Wrapped staked ETH and WEETH are among the top 5 assets by TVL, accounting for over 25% of the protocol's capital. So, this is what we're talking about, that we haven't potentially seen the full fallout of this. So,
we haven't seen anything yet.
Yeah.
I mean, when I look at, I look at my other screen here and I'm looking at some charts, ETH is still above $2,300. So, ETH, if anything, has rallied. If there is ever some type of forced liquidation of one or more big institutional positions on Aave, that could be a catalyst for ETH to finally move a little bit lower. Look, it's still a bear market. I believe that it's still a bear market. So, Mike, I think we've run out of time here today.
We have. Well, let's we'll wrap this up. So, just we'll just this real quick. If you want to, if you want to come over here and join the conversation, join the chat. Make sure that you'll watch all of our 7 different live shows that we have here on the Node Network. You can find us at the Node Network, all one word, on YouTube. You can find us on X, and you can find us there at the Node_network. And of course, you can find everything that we offer, all of our no-cost education, our newsletter that's going to be launching soon, David's coaching program, of course, all of our courses, our no-charge Discord. Everything that we offer is here on the Node.pro. So with that, I appreciate you all. And until next time, Veteran Crypto out.
Peace.